Welcome to Disruptive Successor, a show for next generation leaders in family businesses and entrepreneurs who want to disrupt the status quo and take their existing business to a whole new level. We all know that what got us here isn't going to get us there. This show will provide inspiration, advice, and resources to help you create massive impact. This podcast is sponsored by myself, Jonathan Goldhill, and my company, the Goldhill Group, where we provide coaching for growing companies. I'm Jonathan Goldhill, and my purpose is simple: to guide entrepreneurial leaders in family businesses towards more freedom and fulfillment. I want entrepreneurs to get clarity around the changes that will make them and their businesses more successful so they can experience the same freedom I've enjoyed in my life. Our proven practices challenge business owners to think differently about their business and how they're running it, and quite literally become game changers in our clients' companies. Learn more at thegoldhillgroup.com website, where you can schedule your free strategy session. Hi, this is Jonathan Goldhill, and welcome back to another episode of the Disruptive Successor Show. And today's guest is Perry Trevithick from Reston, Virginia, who is the owner of Scaling Up Coaching. Perry is a CFO, coach, consultant, certified management accountant who combines a successful career in finance, consulting, and helping sell several businesses with always a hunger to learn. He started his finance career in 1981 with Gulf Oil, held positions of controller and CFO for some different companies, left Houston to go work for banks in the Pacific Northwest. And Perry has a degree in finance from the University of Houston and started his career consulting several years ago with Fannie Mae in Washington, D.C. Perry, welcome to the show today.
Thank you, Jonathan. Thank you for having me.
So sorry to botch your name up rather than fix it. I mean, Terry, I'm probably not the first guy that's made that mistake, but it's just that it didn't come off my mouth quickly enough.
Oh, that's okay. Just don't call me late for dinner.
Okay, right. So, Perry, you and I are both kind of in a similar space. We're both coaching small, medium-sized companies. You're maybe still marketing yourself as a consultant, but your business is Scaling Up Coaching. Let's just, and I think what I really like about what you do is the mindset that you bring to your clients, which is if you're a certified management accountant, then you bring a different mindset than a certified public accountant. And let's just help listeners distinguish between the two. And let me start, and you can correct me, but a public accountant is someone who prepares taxes and does audits under compliance requirements. And I like to joke that their marketing agencies are the IRS and the state boards of equalization, or who's ever collecting the taxes. A certified management accountant, by contrast, is someone who really helps an entrepreneur, a business owner, understand and make sense of their finances, make sense of important bank ratios, working capital ratios, leverage and turnover ratios, and someone who can interpret things like, hey, what's your return on your investment in this business versus, I always say you have a choice. You could put your money into the stock market or into a real estate, but you're putting it into your business. So do I have that correct? The CMA versus the CPA?
Yes. Yeah. Very well said. My wife is a CPA, and I tease her sometimes that the CPA is a good starter certification. With all due respect to CPAs, a CPA is a great certification. A lot of CPAs are great CFOs and so on, but yeah. I helped her study for a CPA, and everything was on the CPA, was on the CMA exam, plus a lot more.
Wow.
And so I really felt like it really helped me propel my career, gave me a much more strategic viewpoint of how businesses should be run, and it really was great. And you're right, a CMA prepares you to be a CFO or controller.
Right.
A CPA provides services external to the company.
And, I think what a lot of people don't understand, small business owners, when they're choosing a finance person, is the financial person, can be such an important advisor to your business. I talk in my book about that every business owner should have a boat, which is a business owner advisory team. And in that team, there's an accountant, an attorney, a wealth manager, a business coach, because one person, like the business coach, is driving value. The accountant is distributing that value. The attorney is protecting that value. But really, most business owners miss the boat on their hiring of an accountant, because they hire maybe a CPA, maybe an enrolled agent. They get their taxes done, but they don't get any financial intelligence. They're not advised, hey, your ratios are out of whack, or hey, let's coach you on how to improve your gross profit margin, or let's look at your ratio of accounts receivable to revenues as you're growing. I mean, they don't provide any kind of like financial intelligence, and it's really I think it's a mistake.
I couldn't agree with you more. In fact, when I was the CFO, I used to have that frustration with our tax preparers. I would give them a hard time that I could buy software and prepare the taxes myself. It's not that hard for a simple company. But
right.
What we're paying for is tax planning, and that's one of the key differences between somebody who's forward looking, and I think CMA lends itself to that.
Yeah.
As opposed to somebody who's transactional. In fact, I'm part of what is supposedly an elite freelance platform for CFOs. And supposedly they only take the top 2%. Somehow I slipped in, but what we see over and over again is that business owners come to the platform and they say, I've hired a couple fractional CFOs, but they were transactional, not strategic. Well, if you're transactional, you're a controller. You're not a CFO.
Correct.
The finance person should be strategic. They should be a key part of creating the strategic plan and the OKRs and the KPIs to measure progress and helping push the strategic plan down to every employee in the company. Every employee in the company should understand the basics of the strategic plan and how their job relates to accomplishing the plan. And almost nobody does that. It's so basic, but almost nobody does it.
I think that's a great distinction between being strategic and being tactical. And the CFO is more than just someone who's going to make treasury decisions, someone who's going to invest in marketable securities when you've got extra assets on the current asset side of the balance sheet. I mean, that a controller might be able to do almost as well. It's really the strategic things. And I think that's what you and I are aligned around, particularly when we're working with companies, which is, how do they get more cash and cash flow out of their business? And, it's pretty easy to say, and it's commonly said in the community where I used to spend a lot of time, that revenue is vanity, profitability is sanity, but cash is king, folks. Like, right? I'm sure you've worked for
exactly right. Cash is reality. That's right.
Yeah, exactly. So, all right. So let's first back up and second. Look, why did you get into this business? Why did you choose this work?
Well, I'm very blessed. I'm like you. I've had a lot of great experience and skills, and I could make a very nice living being a CFO somewhere. And this is a lot harder, running your own business. But I want to have a positive impact on people, on a lot of people's lives. I love small businesses and entrepreneurship, and it just breaks my heart to see so many small businesses struggle and fail, or even if they're doing well, most of them are still underperforming. They're leaving a lot on the table, and lots of times there's not that much difference between operating where they are and going to the next level. In fact, I've kind of created this analysis with the bell curve that define 4 levels of business accomplishment. And I call them levels, not stages, because lots of times a business can ascend and descend. Business, if you don't, it's one of those things that you're either getting better or you're getting worse. You're never staying in the same place. And so I have a real passion for helping people prepare their business to sell, for example. And I know your focus, Jonathan, is with family companies, but
you've got to build your business so that you could sell it, because one, you might be selling it to your kids.
Right.
And maybe it's not a sale that has a cash transaction, right? It might be just going against your lifetime gift tax exemption. But, your kids might not be interested in it. Or you might want your kids to buy you out, and you might be needing a valuation. And if you've built a business that's not built to sell, maybe then it won't have such a high valuation. So maybe we should talk to our listeners about what is a sellable business and how to build your business to sell. Do you want to take that on, Perry?
Sure. I love this subject. And what I've learned is only about 5% of small businesses will be sold. The rest will be closed down or basically given away.
Wow.
And I'm a Christian, but I don't think you have to be to agree with this statement that if we don't build our business to run at the optimal level, we are dishonoring the gift and the giver. We've been given these skills and opportunities, and if we don't, help our staff grow and as people and professionals so that they can become the management team that runs the business without the owner, and install a great culture and create and implement a great strategic plan, and all these, create great documented processes so that if should a key person leave, that another person can come in and get up to speed quickly, all those kind of things, then you're really leaving a lot on the table. And
it's really a shame. And I understand. And I'm going to mess this statistic up, but I think it comes from bizbuysell.com. They talk about the number of businesses or percentage of businesses that get listed, I think, on their platform that don't sell. And as I recall, it's somewhere between 1/3 and 2/3 of all businesses that go on their platform never sell. So, if 50% of businesses don't sell, how are you going to beat the odds? You're saying you think 5% sell. So, let's talk about, let's get back to the, how do you build your business to sell?
Well, and this may come from my background, but most of my career as an employee was in the area of strategic planning. And I think that's always a great place to start. And Vern Harnish talks a lot about it in his book, Scaling Up, which you and I both like that philosophy and use it in our practice. And so I would start off with, and sometimes I've been told that somebody asks me what time it is, and I tell them how to make a watch. So I'll be careful not to do that right here.
Okay.
But this is a subject I'm passionate about. So to start off by defining the organization's values and beliefs, and then I would say hire people. Use that in your hiring process to make sure that the people you hire are in line with those values and beliefs. And one thing
you and I are big fans of that, for sure. Absolutely. Right. And that's about building a strong culture and about not destroying it by hiring people that don't fit the core values of the company.
That's right. Because a culture is ultimately the sum of the people that you've hired. So,
so
if you have, so the old saying applies: one bad apple ruins the batch.
Yeah.
In fact, I like the 4 quadrant analysis that what's the guy's name used to run GE? Jack Welch used to use. On one axis is culture fit, and the other axis is performance. And so even if you have a high performer and they're a bad culture fit, they can't be part of your team. They're just going to destroy the team.
So important. And by the way, a little plug here. That's one of the tools on my website, disruptivesuccessor.com. You can download it and you can apply that tool in your business. It's so important because that 2x2 matrix that Jack Welch I guess maybe it was Brad and Jeff Smart put together. Those are the guys who founded top grading and the Who method. So important. And people, as I'm sure you'll agree, is the ultimate competitive advantage in business.
Absolutely.
Not technology, not finance, not strategy. I mean, people develop strategy.
That's right. In fact, quoting another great business guru, Peter Drucker from the 1950s, culture eats strategy for breakfast.
Yeah.
And in fact, I would say culture is the most important component of strategy.
Yeah. Interesting. Wow. So I got to build my culture to build a business to sell. I mean,
absolutely. Because culture helps you implement your strategic plan. So you define your values and beliefs, and then you create a 1, 3, 5, 7, depending on you time frame, but
right.
Short-term and long-term strategic plan goals. And I believe in having big goals, because even if you shoot for the stars, and even if you come up short, you still got to the moon, and that's great.
Right. Now, what about having a second in command, like someone who really could run the business completely in your absence, or a team? Do you have a preference?
Yeah, absolutely.
Do you think that weighs heavily into the valuation of the business, like I do?
Oh, absolutely. But because otherwise, when it comes time to sell the company, you're if you've not built a team to run the business without you, you're selling a job. And how much is somebody going to pay to buy a job?
Yeah.
Right.
Or they're just buying the intangible asset, the name, the mailing list,
right.
And they're going to gut the company of everything else. So
that's right. Plus, I mean, you and I think good business owners care about the people that work for them. And when you build a management team that can run the business without you, I believe that everybody in the company benefits. I believe they become better people. As they grow their people and business skills, I think they even become better family members.
Yeah.
And then so the idea is that the owner becomes takes the place of a visionary and maybe the steward of the culture. And the management team basically runs the business. In fact, I read this one book where the owner took a long vacation and he called back a couple times to the office, and the receptionist was giving him a hard time. Said, we're doing fine without you. You built a great team. In fact, if you call again, I'm gonna cut you off our list. The receptionist told the owner, in jest, of course. But
yeah.
Am I talking too much?
So let's talk about some of the other concepts around making a business valuable. I mean, one thing I took away from John Warrillow's book, The Built to Sell, and that value builder system, was the importance of building a moat around your business. And I was lucky enough to run an economic development center for 10 years that we scaled up, and we had a moat around the business. There was no one within our geographic area, let's just call it 50 miles, who could do what we did. What do you think about that concept? Like, I know Warren Buffett was a big fan of it, but how do you build a moat also around your business?
Well, I think it kind of goes way back to, again, the strategic planning process and the marketing piece of that. It ties right in with your unique selling proposition.
Yep.
In other words, what do you do differently that adds value that your competitors don't do?
Yep.
Because if you don't have that, then you're basically competing on price, and even Walmart is finding that doesn't work. So you're exactly right. If you can find something that's unique that your competitors can't copy, then that helps you build a moat.
Yeah, I think the question, and I maybe hear this from Vern Harnish, is, what can you be the absolute best in the world at? And maybe that came from Jim Collins, but that very few other people can compete against you on. And like, how can you put yourself into a category of one versus being commoditized, and which then boils you down to price?
That's right.
So anything else that really stands out? Of course, you need a good set of books. You need clean records. People who put a lot of type expenses that, you have to clean up to sell, or, you don't pay taxes. And so it kind of then makes a buyer kind of get a little bit scared. What are some other things that come to your mind that are pretty important if you want to build a valuable business?
Well, one thing, and this may go back to my finance background, my CMA approach to the world, to business. So many times, Jonathan, you probably see this too when you go into small businesses. Lots of times I ask the owner if they review their financial statements on a regular basis. And an answer I often hear is, I've heard business owners tell me things like, well, I don't really know how profitable we are. We have a lot of cash in the bank, so I think we're profitable. Or, I look at the financial statements, but they don't make a lot of sense to me. And one thing I often find, especially when I look at the income statement, is there's a lot of cost of goods sold items scattered throughout the operating expenses.
Oh, wow. That's a big mistake.
So that's a big mistake. So one thing I do is work with the accounting team. Let's get the proper P&L, and then take that P&L and do create a report that breaks margin out by product and customer.
Yeah, I like that. That's great. Like we call those waterfall graphs, where you can compare the contribution margin, or let's call it gross margin, of different product lines, of different maybe customers, of different geographic areas. Super important when you're getting into a multi-location business, or a larger business. Super.
That's right. And in fact, helpful. I want to do that before we grow sales. So many business owners, let's grow sales. It's almost malpractice to grow sales before you do that. You might be selling unprofitable products or to unprofitable customers.
Exactly. I think also, a lot of times people don't know who their core customer is. And that's a big problem, right? We find out that they're along the same lines, that they're selling more of the same stuff, but they're not getting an optimal profit. They're not getting referrals from this type of a customer, or they're not in a geographic market, or they're not of a size transaction that really makes a lot of sense.
That's right. So. In fact, that almost goes back to the unique selling proposition, because if you've carefully crafted your unique selling proposition along the way, I think you really need to identify your ideal customer. And along with that comes the understanding you can't be everything to everybody, but you can be the preferred provider to a certain group of people.
Yeah. I think also it's difficult, in my experience, to sell businesses that don't have some kind of reliable, predictable, or recurring revenue stream.
Absolutely.
So contractors, I work with a lot of them that are just doing design and build and construction and installation, or job shops. I worked with a lot of machine shops early in my career. Like, if you don't have something that's predictable and reliable, who's going to want to buy that business?
Exactly right. That's right. You want reliable, predictable revenue, and especially if you can have it under contract. And lots of times, in fact, I was taking a look at a carpet cleaning company, and I was thinking of all the ways they could create a more reliable, regular income stream.
Sure.
They could educate the customer.
Service agreements.
We could come in twice a year, and create a joint venture with an HVAC company that
absolutely
make sure you're blowing clean air into the house. All those kind of things. It's exactly right. I
like to say to people, like, think of someone who sells to your same customer, and figure out how do they sell before, during, or after your transaction, and how can you create a joint alliance with them. And that's why people like you and I work well together. I work well with marketing people, because I can't really help a client if they don't have a good set of books and they don't understand their numbers, because I don't really know what's working and what's not in terms of revenue, profitability, gross margins, things like that. Or if their marketing is not working and they're not driving sales, then likely that they're not going to be able to pay for either of our services. So
well, that's right.
That needs to work.
And the numbers, of course, a lot of people don't realize this. The numbers are just as important on the marketing side.
Yeah.
A lot of companies have all these marketing efforts, but they don't carefully track the numbers to know what the ROI is on the different lead generation strategies. And one thing that's really exciting is, it sounds silly getting excited about this maybe, but if you carefully monitor the conversion ratios along each step in your sales process,
sure.
Then what you can find is lots of times you can change things a little bit and maybe take this ratio from 5 to 7.5%.
Right.
That may not sound like much, but that's 50% more customers revenue at the other end from new customers.
Exactly.
So lots of times you can increase sales, between 50 and maybe 6 or 7 times by simply optimizing conversion, leads and conversions and average dollar sale, all those kind of things.
I agree. I think that's so important. And I used to center my coaching around that philosophy. I think you're familiar with it as well, but well, what if you could sell 10% more? That means close 10% more of your selling transactions. What would you have to do to improve your close rate by 10%? What if you could increase your sales price by 10%?
That's right.
And interestingly enough, I've used some complex financial models, but usually come out with the same experience each time, which is it's not about increasing the volume as much as it is about increasing the price. The increasing the price, it drops right down to the bottom line. Increasing the volume, it not as much drives down to the bottom line because your gross margin is still the same. So
that's right. In fact, I've worked with businesses where we actually reduced revenue. We got dialed in on the margins. We reduced revenue, but the company was a lot more profitable.
Yeah.
And there was a lot more stress on the company because obviously there's a lot of effort that goes into customer fulfillment. But if you've increased your margins, you like I said, sometimes you can make more profit with a lot less work because,
right.
And then that gives you capacity to go back to those volumes, but at a much higher profit.
Yeah. So tell me about one of the clients you work with. It was, you were telling me earlier on about a software company that sells billing services to ISPs, internet service providers.
Yes.
And that you implemented some concepts around their profit and loss statement, profitability by product and customer, and really tripled their profits and cut the owner's work week down from something crazy like 80 hours to 10 hours per week. Tell me a little bit about how you went about that assignment with a client. Let's start with how did you sell? What did you sell to that company, and how did you sell them on you? And then what did the work look like? Because a lot of people are pretty leery. A lot of business owners are leery of bringing consultants into the business. It's really creative. I think when a consultant can say, "Well, let me find my fee," and I think you do some of that work as well. So
yes, I do that work.
So let's talk about the software company, if you don't mind. Tell a little story about it, if they don't mind. How did you go about identifying that client's issues, and then tell us a little bit about the way you went about it and what the outcome was.
Yeah, I appreciate that. Yeah, they're a great client. One thing I love about this client is almost everything I recommend, he says, "Good idea, let's do it." and of course, it's not about me. I just want any client, any company to operate at their best. It's just satisfying working with somebody who's humble and willing to take action. And we actually got connected through this freelance platform I mentioned earlier. He hired me and brought me on board, and he liked my work a lot, so he paid the fee to be able to work with me directly instead of going through the freelance site.
Mm-hmm.
And so that one of the first things we did was to train the accounting team. There's two members of this accounting team, and they were taking about a week or 2 weeks to close the books. Now they close the books in about 2 hours. So usually well before noon on the first working day, the books are closed.
Wow.
And that's with all the accounts reconciled. And for somebody who's not accounting and finance, that's so key. If you don't have all your accounts reconciled, your numbers may not be right. Mm-hmm. So it's really key in fact, I graphed out the P&L, and before we started working on it, before he brought me on board, there was a lot of variability in the P&L, which indicates that it's probably not so accurate. But since I came on board and we started cleaning up processes, the P&L is a lot more in a straight line, mm-hmm. and upward. But it makes more sense if we start reconciling accounts every month. And so not only do we close the books early the first working day, but by the end of the first week, he has a good forecast for what that month's going to look like.
Great.
Now, in all fairness, he's in a recurring revenue business, so that makes it a lot easier. But that visibility gave him the ability to understand his cost a lot better. We cleaned up the margins and created some reports that were put together a P&L format that fits his industry much better, and so that gave him the understanding about which costs he could cut. So he was able to, and he was pretty cost conscious before, but he was able to cut a lot of cost and bring on a couple of stars in his industry. A gentleman who had built a similar platform and sold it, and who's a crackerjack software designer and coder, mm-hmm. and another gentleman who's probably the top engineer in the field, and they've really accelerated development and bringing on new features, and so that what we're working on now is and along the way we've implemented a strong set of KPIs that are tailored to the business, and it's a work in progress.
Right.
And this may sound like something small, but it's actually big. I've been working with the team to be forward focused in our meetings. We have several. They follow the traction program, so mm-hmm. we have continuous improvement meetings every week. Mm-hmm. But what I see over and over again, Jonathan, you probably see this too, is the management teams comes together and they review historical numbers.
Yeah. Yeah.
And I said, well, wait a second, we can do that before we get here. This meeting should be on how to fix problems and move things ahead.
Yes. Very good. And very true. And that's why EOS, the traction system, makes a really important point of the scorecard being leading indicators. And
that's right.
And scaling up, and Vern, they have a mix of leading and lagging indicators, which mm-hmm. is what I generally find my clients have on their scorecards, is a mix mm-hmm. of leading and lagging. It almost would be nice to group them together, group them separately. I'm sorry. So group them by leading and lagging.
I agree.
People might see that, wow, too many of them are lagging indicators. So
that's right. I think it's important to have both. And I like, I think it's Vern that does the color coding.
Yes. Yeah. I think the red, the yellow, the green, the super green. I'm a big fan of that.
Green. Yeah. I love the super green. The super green gives people incentive to blow the doors off the goals.
Exactly. So important. So good stuff, Perry. I mean, this is really, it's challenging sometimes to get a client to want to engage with you or with myself. So you do have a program where you ask for them to give you 45 minutes, and you'll find your fee by finding $100,000, and you take them through a profit acceleration tool, one that I used to use in its infancy. I'm sure it's much more well developed. How well does that tool work? And do clients believe it, or are they so skeptical that they just dismiss it?
No, I think they believe it. And the process I was trained to use, and that I use, is to there are 40 different strategies, which is way too many for anybody to get their arms around. Of course, based on my knowledge of the company, I pick 4 or 5 or 6 that we go through. but I'll explain the strategy, and then the client or the prospect can visualize how it might improve their communication with prospects and customers.
Mm-hmm.
And I asked them, well, if we implemented this strategy in your company, what do you think the effect on your revenue would be?
Mm-hmm.
And if they say, well, gosh, that'd be 20%. I try to be very conservative here and say, well, I'm not going to put 20%. Let's just use 6 or 7. So
right.
I'm very conservative all the way through, but at the end, the prospect or customer can look at it and say, wow, look at that, revenue went up 50% or profit, that much or more. And since we were so concerned, I use their numbers, their guesses, and I dial the numbers back.
Yeah.
It's very credible. And of course, that's just on the marketing side. That's not cost cutting. That's not improving culture. That's not improving margin. All those things and I bring to the table in addition to that.
Well, you and I both know that cost cutting is somewhat limited, but revenue generation is kind of limitless. So focusing on the marketing side is going to be the quickest way to add value to
Absolutely.
So, Perry, it's been a pleasure speaking with you. I love your email address, which I'm going to share with listeners. It'll be in the show notes. It's perry@solvingtheprofitpuzzle.com. So I think that's a great email address.
Thank you.
I find a lot of companies come to me, they've already got good profitability, but they don't have their people and execution and accountability issues really ironed out. But many of them, some of them just don't have the profitability figured out either, because they're early on and they don't know their costs, their overhead, their recovery rates, things like that. For a guy like you who's been in the trenches for so many years, I'm sure you're really gifted at helping them figure that stuff out.
Yeah, so. Thank you. I appreciate the kind words.
Yeah. All right, Perry, thanks so much for being on the show today.
Thank you. And it's been a pleasure.
If you've enjoyed this show, please listen, share, subscribe, tell others about it, and catch us on our upcoming episodes. This podcast is sponsored by myself, Jonathan Goldhill, and my company, the Goldhill Group, where we provide coaching for growing companies. I'm Jonathan Goldhill, and my purpose is simple: to guide entrepreneurial leaders in family businesses towards more freedom and fulfillment. I want entrepreneurs to get clarity around the changes that will make them and their businesses more successful so they can experience the same freedom I've enjoyed in my life. Our proven practices challenge business owners to think differently about their business and how they're running it, and quite literally become game changers in our clients' companies. Learn more at thegoldhillgroup.com website, where you can schedule your free strategy session. Thank you for joining us on the Disruptive Successor Podcast. If you enjoyed today's episode, please subscribe, review, and share with a friend who would benefit from the message. If you're interested in picking up a copy of my book, Disruptive Successor, go to disruptivesuccessor.com.